Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 25th of February here in 2021. And we have a lot to talk about, so I can't really narrow down to one specific factor, but we'll be talking about Tesla, GameStop, and of course the market, the pullback, and the bond market, just to name a few. But we'll start with the equity market, which is on this persistent uptrend. Higher high, higher low. And this is another type of kind of a compression. It's not really exciting for the bulls or the bears. It's just creeping. It's called a creeper uptrend. Not the first time we've seen this, but it's where we have the market, at least until this week. What changed this week? Heightened volatility. Finally. And some actual sell side activity. That's exciting. And that's profitable for the short side, for the puts. It's been a while since that happened, but all it takes is one session. And those puts, bear positions or hedge positions, do come quickly in the money. And that is the strategy for those that are contrarian or are playing puts in an overbought market. That is a strategy that is correct. But it's one that takes a little bit of frustration before it pays off. The exact opposite strategy would be playing the pro trend. What is that? It's multiple days of up, 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 fun, 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 happy, 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 until, right, it's just happy, happy, happy days, until one or two sessions takes it all away. One or two sessions takes it all away. Two sessions, one session takes it all and more. And here we have the same thing happening. So it is up to you and your individual trades, but that is how markets work. They creep, they step, they ooze, they go slow to the upside, and they go fast to the downside. If we pull the perspective out, the S&P was down about 2% today, down 100 points at one point. The Nasdaq was off 500 points, just a little bit under that right now, 3.5%. And the Dow, that is the strongest index, which has something very curious about it that I will show in a moment. It was only down 1.7, but it was off 600 points today. And though 85 points in the Russell doesn't seem like that much, it is 4% to the downside. And that's key for taking a look at where we are and where we have come from in the markets. Now, the other side of the equation is something just as interesting. With the equity market in creep bull mode, the bond market, we'll take a look at TLT. Let me take that off the chart for a moment, has been in creep down mode. Now, this is a downtrend, so we're having the bigger swings or the bigger downside activity take place in the direction of the trend. And that's the downside. But like anything, trends don't go straight up or straight down. They, as we might say, wiggle and squiggle. So we're looking at that, right? Down, up, so on and so forth. So we didn't really get another swing up. Instead, we got this, which is persistent activity to the downside of the market. And here it is. This trend broke and fell hard. So Don has been discussing this with us in the daily and the evening weekly videos. And this is critical to watch both on the ZB, which is the 30-year Treasury bond, and the ZN, which is the Treasury note. On the flip side directly of that is the Treasury yields. So looking at the TNX is the 10-year Treasury yield, which has risen from under 1% to 1.6%. And that is a significant, rapid rally. And that is something to keep our eyes on as we go forward. So that's going to be the key thing to watch. That's really important here. And these things don't last forever. Even this will pull back. But this is the market that we have at the moment, and it is putting pressure on the equity market themselves. And the S&P 100, there are a few stocks that stood out today. One of them was NVIDIA. And this concept of that which goes up tends to go down, sometimes just as quickly. So that is what we are watching or guarding against or profiting from within today's session. So the pullback took us on a rubber band type of play. Again, playing puts in an overbought market is the strategic and correct thing to do, but it does take a few days of pain or losses. And with the puts, that doesn't matter too much because you may have spreads or you may have the put itself. You don't use stop losses with option contracts like that. And in one or two sessions, the entire position, no matter where it was put on, is profitable. The same thing happened here and there. Now that's NVIDIA on the big picture. And that was, again, earnings, yes, but still, that was a catalyst to get it down like a rubber band snapping back. Here's the key and things to watch in the next few days and into next week, and it's Tesla. Tesla has fallen from 900 to 600 just about, which is a 30% decline top to bottom, or peak to the most recent reversal. And that took place on Monday. So that overbought, right, same type of logic, multiple days to the upside, they result in not more days to the upside, but some type of pullback or something really, really big if it is an overbought or grossly extended swing. And again, that's just a rubber band type of play, all things being equal. So Tesla has fallen, and that is really, really a big draw or drag on not necessarily the entire market, but the S&P and the Nasdaq. So that's one to watch, and the others were in here, and they include Qualcomm, which played down to a level. PayPal, which similarly got the snapback, the pullback, the retracement. Intel maybe not so much, but there is Apple, which is down 20 some odd points from its earlier 2021 peak, and that's back down to the 120 print. And we saw Google, or Alphabet, took it right back to there. Mentioned, I would say, GameStop, but only from the perspective of it is getting volatile again. Volatile from a perspective of jumping from under 50 per share, really closer to 40 per share in the last few sessions, all the way to 180 and then back to 100. So the games are being played again. But it's just key to watch this, or at least stand aside. That's the easier thing to do, because the option spreads are a little bit too high, or the option liquidity or the bid ask is just too much for most traders for short term. Long term, maybe, but short term, definitely not. And the final thing to talk about is the differences in the expected moves. So this is our TheoTrade auto-generated expected move chart. All it shows is the green is the top of the weekly expected move. We'll look at the ES. Remember, Don does his own hand-drawn SPX expected move prints and gives those on the weekend video. But this is our Theo auto-generated expected move. And it does provide targets to play for on the intraday or swing perspective, and targets to play a reversal or bullish into the lower expected move, bearish into the upper weekly expected move, as that would have occurred here or here, but then bullish into the lower bound here, here, almost there, and this week. So we're going to go into Friday's session just a little bit above that weekly expected move, and that's about the 3824, 38323 level. That is in the S&P at the bottom of its weekly expected move. The Russell has a similar, if not just about identical, start of Friday, which is right there in that expected move. For the Russell, that's about 2198, or just call it 2200 to be a round number specific. So the S&P and the Russell at the lower bound of their weekly expected move. How about the Dow? Well, the Dow tagged and turned down away from, remember it's a short type of setup, against the upper expected move for an aggressive trade, and that played out. So the Dow Jones is right where it closed on Friday. That's what that yellow line, or the white line is the Friday's close. And that turned down from the upper expected move. Well, what's the odd market out? Tech sector. That's again down to Tesla, Apple, Google, Amazon, and other stocks that had deeper pullbacks from their overbought conditions. So the Nasdaq started the week at its expected move, and that was roughly about 13,250. And Tuesday traded down away from it, back inside of it. Today's session takes it right back to that low. So we have a situation here where the Dow is touching or into the upper expected move and coming down. The Nasdaq stayed every day but one under the expected move, while the Russell and the S&P will start, at least go technically close on Thursday session, but start Friday session, assuming there's no big gap into the expected moves. So we have a drop zone beneath us and a support bounce type of expectation, just like Tuesday. Nothing is guaranteed. It is all probability. So if we do start to trade Friday underneath this bounded expected move, will be a similar type of market where once we get above it, although it's a lower probability play, markets can explode. In this case, it would be a pullback toward down and under 3,800 in the S&P. Always be careful and safe. This is Corey Rosenblum with tonight's Theo video update for February 25th, 2021.